Welcome to the Practical Wealth Show. Most people are told to save money, invest in the market, and hope it all works out. But if you look at how the 1%, top 1% actually build wealth, it's a completely different strategy. And so that's what we're going to talk about. So today, I've got Mr. Dave Wolcott on the show, former, and I'm going to let him tell you more about himself, but Marine entrepreneur, founder of Pantheon Investments, who spent the last 20 years studying how high-level investors actually create predictable cash flow, tax efficiency, and real control over their money. But here's what we're going to do different. We're not going to talk about what to invest in. I want to break down the strategy behind the wealth, where most people lose money without realizing it, how liquidity and control matters more than returns a lot of times, and how to actually build a system where the money works for you before you ever invest a dollar. Dave, welcome to the show. Welcome to the Practical Wealth Show.
Hey, Curtis, really grateful to be here and connect with you and your audience.
Yes, thank you for having me. Thank you for coming on. Yeah. So tell me, what did I not tell them that you want to start out with? Like, I went through a brief thing. Thanks for your service, Marine. Sorry, you're tough. And tell our listeners, how'd you start? What led you down this path?
Yeah, for sure, Curtis. Look, I was raised in a middle-class family in Connecticut, and frankly, we didn't really talk about money much. It was pretty much considered taboo. Money doesn't grow on trees. There's kind of really all this scarcity mindset around money. Yep. And I was told that the recipe for success was go to school, get good grades, you're going to get a job, and life would just kind of pan out, right?
Right.
So I kind of followed down that path and had the opportunity to serve my country in the Marine Corps after college. I learned some amazing things about myself. I traveled the world. I learned about leadership, integrity, and teamwork, and what that really means. Shortly thereafter, I transitioned into the corporate world, got into the tech industry. Mm-hmm. And at the same time, my wife and I started raising a family. We actually had an 18-month-old toddler. And then, Curtis, on October 24th, 2000, we literally hit the baby lottery and had triplets. And I can tell you, that holding 3 babies in my arms at the same time was probably one of the most profound experiences I've ever had in my life. And the first thing that was running through my head was, how am I going to provide for financial security for my family, right? They're talking about $1 million per kid. I'm 26 years old. Okay, now I just bolted on $4 million in expenses here. How am I going to figure that out? So I went to see my financial planner, and all he could tell me was max out your 401k, invest in 529 plans that are tax efficient, for your kids. And it was right then, Curtis, that I knew, that the top 1% were not building their wealth as retail investors in the stock market. And it was a system built for other people. So this launched me on this obsessive journey to figure out how the top 1% were actually building wealth. I started actually investing in all kinds of private assets, everything from single family to multifamily, to raw land, to office parks, to oil and gas. Fast forward 20 years later, I built an amazing portfolio of private assets. I learned about the importance of tax efficiency, about cash flow, and about really harvesting hard assets, right, that can create this trifecta of a return versus this, what I call the default wealth track, which 95% of Americans are on, just putting it in Wall Street and hoping and pray that it's going to go up over time.
Walk me through, because it's funny, I had a similar realization, although it wasn't as good as finding out I didn't find out. I realized that this does not work, but it took me a while to figure out what does. So when did you realize traditional advice wasn't going to get you where you wanted to go? And then how did you, because a lot of people are feeling something's wrong, but they don't know where to start. They're making good money, but all I know is my 401k. Like, let's talk to them for a
Yeah,
second.
and I think the systemic issue is actually education, right? Because we're not taught this anywhere, whether you're a doctor, lawyer, engineer, or anything, right? We're not really taught about this anywhere. So we kind of have to go through it for experience. You get your first job, and what do they say? They say you actually have to get a 401k, right?
Right,
And then they tease you with free money, as they call it. You'll get a 3% match, which is free money, right?
right,
Which
right,
it's not really once you get into the numbers.
right,
But look, Curtis, I started approaching this just like an entrepreneur would, right? Very quantifiably, pragmatically. And I started looking at things like, okay, does it really make sense to defer my taxes,
mm, hmm,
until the end of life when, if I have $100,000 now and that's going to grow to 4 million by the time I retire, okay, then I'm going to pay taxes on the 4 million instead of the 100,000 that I have now. And oh, by the way, the government controls what the tax rate is. So who's winning here? The
right,
government is winning and Wall Street is winning. And oh, by the way, they're going to be collecting fees, 1%, 1.5%, whatever that is, over the lifetime of your next 35, 40 years, just to hold your money. Right.
right.
So there were things like this that were really myths that I broke down, whereas everyone's trying to say, just defer your taxes. And I'm saying, no, I'd rather pay taxes on the seed rather than the
For the
harvest,
harvest,
and
yes.
put it into things like, real estate, where I can, I'm done paying taxes. Right. And now I have assets that are growing tax free, which is, a significant gain. So that was a big one. Again, understanding the impact of fees over long term, right? We all get our 401k statements and we think that, hey, we're doing okay. The market's up 15%. Like I'm doing really well. It's still growing.
Hmm.
But what they are not telling you about is the impact of taxes, fees, and inflation.
Mm,
And if you look at any given 20-year period of the S&P, you're likely averaging around a 7.5% return over that long haul. And then when you factor in taxes, fees, and inflation, it's actually more like 2.5%.
wow,
So
that's great.
people are really getting surprised when they go to pull out that money when they really need it.
It's funny because we in our business we try to show that opportunity cost, like the cost of of what you're, like we say, one of the things we teach in infinite banking is you finance everything you buy, right? So when you pay cash, you're not paying use other people's money, but you're giving up money you could be earning. So if you look at the types of things you do, I have somebody who was paying, like, you're ready to pay 20 grand a year for private school for the next 10 years. So that 200,000 now, so I'm not saying not do that, but you could put in a situation where you can have your cake and eat it too. But if you could keep that money and talk and learn to do some of the stuff that we're going to talk about today, you could have more wealth. And you
Yeah,
know,
100%, Curtis. So look, I've been a practitioner of infinite banking myself for 15 years. We have multiple policies. I have policies for my kids who are in their 20s now and are using it really effectively. And
mhm,
this is one of the things that I've learned about the ultra wealthy that they do really well is they look for multipliers. So where can I take $1 and actually have it do multiple things for me at the
right,
same time, right?
right,
Infinite banking is huge about that. So your audience probably understands that. But we do things like, let's call strategy stacking, right? How many, if I can borrow that capital and the principal remains intact, that
right.
cash value continues to grow over time, right? So that's kind of accelerating. But now maybe I can put that additional capital into another opportunity, right? We invest in things like real estate, commercial real estate opportunities, energy sector, and also private credit, where we look to really, I would say on average, get 20% returns or better that are
Mhm.
tax efficient. And then when you add in the fact that we're adding some leverage to it through your IBC policy, there's some fantastic arbitrage and velocity that you can create.
Right. Velocity through simultaneous use, I call it, right? To stack the stacking part.
Spot on.
So you talk about holistic wealth strategy. Are there phases? Like, what are the phases of that? How do you approach
Yeah.
that?
So in my book, The Holistic Wealth Strategy, there's really 5 phases that are within that book. And it all really starts, Curtis, with just getting a crystal clear vision on what does your life really look like, in the next 5 and 10 years, and really describing in a vivid level of, what are your relationships look like, right? What does your, financial wealth and abundance look like? What does your health look like, right? Who are you spending time with? What is your purpose, right? All of these things that really drive us, because that's what will actually anchor you to
Yeah.
break down walls and to go and ascend into higher levels. And then from there, we have 5 distinct levels. That's really a framework with how people can grow their wealth. And the first one is, frankly, the most important. And it's really all about you and understanding that you are your greatest asset. So anytime I invest in myself, I expect to get a 10x, 100x, or even greater type of return. And what I mean by that is investing in things like listening to this podcast, right? And getting yourself educated. And
Right.
in that way, you're growing your intellectual capital, right? I can be investing in my health and think about if you can bring 10x the energy to your business, to your relationships, your family. I mean, what is that going to do for you? Look
Yeah.
at Steve Jobs, for instance, right? He had all the money in the world, but he couldn't buy himself one more day of
Right.
health.
Right. Absolutely.
Yeah.
Yeah, I think that's brilliant because the who did I hear this from? I don't know, it was Jim Rohn. What do you invest in? Your mindset, your skill set, and your network. Because your number one asset is you, and you're your number one invest because people look at money, but money is a result of creating value in the marketplace, of solving problems for others. And a lot of people, they want the money, but they don't want to, like, even with some of the investing things, you have to become a good investor. Like you've become, through the work, through the self-development, through the trial and error. And so it's be, then do, then have. And most people don't want to become. They just rather give it to some fund manager they ain't never met and hope all works out. Right. And
Yeah,
I
I mean, why would you wanna do that, right?
yeah,
Outsource what you work so hard in your life to, and then just give it to someone else and then hope that it's going to do well, right? I think there's an important construct that we talk about in terms of holistic wealth, which is very different than what media portrays, rich to be, right? With the nice car and the big house and things
right,
like that. But
right,
and true holistic wealth, there's actually 6 forms of capital. So obviously you have financial capital, but there's other dimensions which consist of intellectual capital, human capital, spiritual capital, and emotional capital. And when you can put all of these things together, right, that is truly the makeup of someone who is really, ascending to a higher level of consciousness in this universe. And abundance is, they experience amazing levels of abundance, of joy, of love, of fulfillment, and really can truly create impact in the world. But so many people, right, are struggling in this scarcity type of mindset, and they're pushing and they're grinding, and then they're looking for things for themselves. And the more, money and abundance is like a magnet, right? The more
right.
you chase it, it will actually go further from you. But when you can really embrace that abundance internally and really come from your own internal perspective, you'd be amazed at the opportunities that present themselves, the relationships that you create, and the doors that you open.
That's brilliant. I mean, Nelson would say if you have capital, opportunities will find you. If you're, and you got to be, let's talk about liquidity for a second, because you have to be, like, when you look at the phases, where does that strategy, or the it's not even a strategy, it's more philosophy, break for the average person in that you've experienced? Where does it break down? Is there where it just, all right, they messed up and it just breaks? I think it's with attitude, but I'd like to get your opinion.
Yeah, Curtis. I mean, so many people think they have a return problem and
Hmm.
trying to get a better return, but they actually have a structural problem,
Come on now.
right?
Yes.
And in phase 3 of the holistic wealth strategy, we actually talk about 2 things. We talk about creating infrastructure around
Hmm.
your wealth, and
Hmm.
we talk about creating a dream team around your wealth. And this is where infinite banking comes in, because it's a fantastic strategy, right? And it's not about the product itself. It's actually about the entire strategy that you're setting up to actually create liquidity in your own system, right? And yes, you have your own banking system, but now you're actually, right, creating this liquidity management system that's tax efficient. You can collateralize against it, right? It's part of estate planning, right? So you could give it to your heirs, right? That's what the Rockefellers, right, did, as we know, right? So you create that infrastructure to do that, which is really, key and can accelerate your wealth. Other big areas around that are tax planning, right? Most people don't realize that 99% of CPAs out there are actually tax preparers. So that if your CPA is asking you to give you all your statements, this time of year, and then they're looking in the rearview mirror and then saying what you owe, you have a tax preparer. If you're working with a tax planner, on the other hand, you're working with them throughout the year, and you're devising a strategic plan to optimize how you receive income. You're optimizing entity structure. You're optimizing deductions. You're optimizing investment opportunities that can actually start to reduce your taxes. And just think about this. If you guys, if you're averaging whatever assets you're investing in, let's say you're making somewhere between an 8 and 14% return, whatever that might be for you, just think about if you could reduce your taxes by 10%, 20%, or 30% on top of your investment gains. And now you've literally just 3x'd, right, the amount of available capital that you can have to then do what? To then fund back into your policy and create dry powder for new opportunities. And what we do by creating this infrastructure is not only managing our liquidity, right, but we're actually creating a cash flow flywheel where we're enhancing the liquidity, we're driving the tax efficiency, and we're buying these hard assets, right, that support the entire thing, so you can get to financial freedom.
I love that. See, because what do you think you said? It's a system. It's a process. It's not about a product, and it's not the engine. I always tell people the banking system is more the turbocharger, right, to make everything else you do work better, work harder, work more efficiently. And the businesses, the investments that you create is really the engine. Correct me if I'm wrong. That's true. But you have a structural problem. Most people don't have. I was talking to somebody yesterday. One of my clients said, you make 150 grand a year. You don't have an income problem. You have a structure problem. That's why you can't save money, because of the way you handle cash flow, because most wealth is lost there. And so this is where, in taxes, I want to elaborate on that a little bit more, because I tell people your taxes are your number one transfer of wealth. And everything the 1% do is to correct me if I'm wrong, not every, but it's to minimize current and future taxation. It's like number one on their list of things that they do. Was that an accurate statement?
Yeah, well, I think what people need to understand is take a real paradigm shift. And actually, most people think, because they're W-2 employed, that, hey, I have to pay taxes, it goes to school and things like that, right? To some aspects, that is true, right? But when you can understand that the 6,000 pages of the tax code is actually a roadmap of incentives for business owners and investors. And the reason we're getting tax incentives, like, for instance, if we invest in energy and oil and gas, a W-2 active income earner can actually offset directly with active losses by investing in oil and gas, not to mention kind of diversify yourself, right, from the market. But this is because our nation needs energy, right? It supports GDP. It supports everything, especially what we're seeing right in today's market. So when you can understand where the government is incentivizing you, you're actually partnering with the government, and that's where they give you the tax incentives.
I think people miss that. Like the tax, I was at a conference with Tom Wheelwright, and he says code is a tax code. Code is another word for map, and he calls it a treasure map, right? And it said, what does the government want you to do? What do they need? What they need? They need jobs. Who creates jobs? Business owners, right? They need food, farmers, agriculture. They need energy, right? Solar, oil and gas, all that stuff, right? And then they need housing. So if you do that, you will, I won't say you won't pay any taxes, but you will seriously limit your taxation. But you have to learn to play on the, to quote the rich dad, the BI side of the cash flow quadrant, and
100%.
yeah,
Yeah.
and
Right. And let me share this, simplification that really everyone should have understood, like when we were in college, right?
Mhm,
Is,
mhm,
I'm sure your listeners have read, the cash flow quadrant, but to simply explain that, if you are a business owner, you can be paying 20% or less in taxes. If you're
mhm.
an investor, you can be paying 0% in taxes. Right. So just kind of level set that to what you're paying today. If you are a W-2 employee, you're probably paying the max amount of taxes. So actually, one of the best potential strategies you can do is actually start to shift to that quadrant and become a business owner. And that could be, creating a business, a side hustle. It could be something like, running a business that manages your investments, right, to
Mhm,
start with. So
mhm.
you can actually, make a shift even if you are working full time.
You know what I see happening? That's brilliant, because I think that a lot of people, they want to skip the what I call the foundation, because it, we call it foundation, you know, saving a percent, 15, 20% more of your gross income. And I mean the verb of saving, not, you can't save your way to financial freedom, but you do need to spend less than you make and capitalize your system, right? You need to protect yourself. So we call it maximum protection. You got to play, I call it, you got to build a moat around your castle. You need liquidity, and then you move the velocity. I find I have to slow people down to speed them up, because they want to jump right into velocity, and they're trying to hit home runs. Do you know? And what I love what you said there, because there's an order to this. There are phases of that, and tell them to slow down before they speed up in your language. That you got to build the foundation first.
Yeah, so we run a family office, Curtis, and we co-invest in different private opportunities with our investors, and we have a lot of high net worth investors that will come to us. They might have a liquidity event, or they're trying to reposition capital. And so our investment thesis aligns to the construct of just think about a pyramid for a moment, right? And rather than your typical pie chart that financial planners give of some, asset allocation model of 60-40, right? That's stocks, bonds, mutual funds type of thing. We've kind of turned this on its head, and have this pyramid where you want to build a strong foundation. So on a risk adjusted basis, you build the foundation really strong.
Mm-hmm.
For us, this is where we see, cash value whole life insurance right at the base, right? Because it's even safer than banks, right? You've got the liquidity, you have the access, it's got the multiplier and everything. So that's the place where, to your point, you can create defense. Now, on top of this, now we like to structure some of these other asset classes that provide that trifecta of tax efficiency, passive income, and forced appreciation. And again, for us, we only focus on three asset classes: energy, real estate, and private credit. And then on top of the pyramid, that's where you have more of your speculative type assets, or your global equities in the stock market, because they're linear in nature. They pay the most amount of taxes, and there's so much volatility to that. So, what I would encourage people to do is, when you have a moment and you're not driving in the car, but literally just sit down on the back of a napkin and draw out some percentages, based on your risk tolerance. Because you can see in that pyramid, the risk accelerates as you go up the pyramid.
Right.
So really work through, what is safe to you. Maybe someone wants 50% of their portfolio allocation in something like infinite banking or very conservative, right? And then other people, if you're younger and you have more aggressive growth plans, right, it might be kind of a little bit flip-flopped. So just really think about that first. And then there's tons of opportunities out there that you can start filling those buckets, but define your strategy and define your buckets first.
I like that. What do you, in terms of, as we do this, there's a war going on, there's tons of volatility, there's a private credit crisis, like, that's why I talk about the foundation. But if you understand what you're doing, it's either risk or there's opportunity, depending on what's going on. How do you see, with all the volatility going on in the world as we record this, do you see opportunities, and where do you see them?
I only see opportunities, Curtis.
Love that
And
answer.
it all starts internally,
Yeah.
because the external world is actually a reflection. It's a complete mirror of what you're thinking. So if you're seeing risk, doubt, uncertainty, challenges out in the world, that's what's actually going to come back at you, right? So we're seeing opportunity because our oil and gas funds are performing extremely well right now. And it was very intentionally positioned in this way, right? Where we had true diversification into a commodity that wasn't, it's completely uncorrelated to the stock market, right?
Mm-hmm.
So
Mm-hmm.
we've always known that and had a certain allocation to that. Also on the private credit, it's quite interesting because, again, you can just kind of take a headline, but what is Warren Buffett's, one of his philosophies, right? Never invest in something you don't understand, right?
Yeah.
If
Yeah.
you look more into the industry, we actually have a private credit fund that has been performing at like almost over 2% a month. And we're invested in not, funding AI companies at the front end of the spectrum as
Right.
like an equity investment. We're investing in things like HVAC companies that are cash flowing, transportation companies. They're all cash flowing. It's asset backed. It's short term in nature.
Right.
And we've been on this credit fund that has just absolutely been crushing in it. And again, it's all non-correlated to the stock market. So I would advise people to, just heed warning to all of the sensationalism that's out there, understand the facts from a quantitative standpoint. And then that way you can become a better investor and be your own best filter.
Yeah. What are you like? What are you reading now? Like, how much? I always like to find, when I've met successful people, how much are you reading? What are you reading, or how are you like getting information? Like, what are your favorite way to get information?
I love reading. I love podcasts. I love audiobooks, and I will consume things mostly in that manner. And I think a lot of that is really personal preference, Curtis.
Mm-hmm. Mm-hmm.
Like when I'm in the gym, listening to podcasts or different training modules, things that I have, because then it's all about being in a peak state.
Yeah.
And so when you can get your body in a peak state and then your mind at the same time, it really sparks that creativity to create new ideas. And really, again, it's all that internal generation of where the opportunities are, where your strengths lie, how you can seize those opportunities.
I love that. Because I say, listen, I tell people, look, you got to read. Jim Rohn says if you just read like 10 to 15 pages a day. Warren Buffett reads like 2 hours a day. But if you read, I'll tell clients this, you read 10, 12 pages a day, and let's say your friend doesn't, you won't know the difference in 30 days, 60 days. But this time next year, you'll be a completely different person, and your attitude will change. So your opportunities will change because you're a different person and you see them. And I think you have to grow to that. So I love that you spoke to that. So tell them, Dave, why don't you tell them about Pantheon, about the book, and what you got going on, and how people can find out more about you and your company.
Yeah, you bet, Curtis. I appreciate that. Really, the problem that we're trying to solve for people is how to get out of this default wealth track, by giving all of your, hard-earned capital to Wall Street and watching it go away in taxes, fees, and inflation, and really looking at a completely contrarian perspective, like we really outlined today, by reducing your taxes, by creating cash flow today,
today.
not when you're 65,
Right.
right? To managing your liquidity and really creating a system. Wealth building is actually, it's a process, it's a system. It's not a one-time event, right? That's how we create it. The people who have one-time events, you see why they actually lose it very quickly, right? So at Pantheon, what our model is we actually have a software product called Pantheon Wealth OS that can actually take all your alternative investments, including your life insurance policies, actually, and then create portfolio allocation model based on how you would like to, allocate capital. It also enables you to identify your goals and do scenario planning and things like that. So we have a software product. We also bring opportunities to our investors in the Pantheon Private Capital Network, where they can invest side by side with us, where I'm placing my individual capital into invisible opportunities that most people don't see. And then people who like to go deeper we have a mastermind community as well for people who really want to learn these concepts further. And then also our family office, which is more of a, kind of done for you model where we help people with wealth.
I love it. So you're going to send me the list of those. I'm going to put those in the show notes
well, you can go a simple way. If you just go to contrarianwealthbuilder.com, we've put together a free masterclass if you'd like to learn about these concepts further.
Perfect. Okay. So we'll put that in the show notes. That's better. contrarianwealthbuilder.com. Awesome. Dave, anything I forgot to ask you that you want to say that you want to leave us with?
I could talk for days about this, Curtis. And frankly, the reason why I'm so passionate about this is it took me 25 years to really to become a professional investor and learn like how things really work. And so I really want to help other people, right, dispel some of these myths and accelerate their trajectory to financial freedom and a life of abundance.
I love it. Like one of my goals, which I'm so excited for this conversation, is that I'm always on a path of learning. This is our first conversation, and I've got a page of notes, of this, and I will, be on the webinar because you have to grow. I mean, I have a good business, but you want to grow, and I want our clients to grow and be, I want to win the war against the Treasury Department, against the IRS, and minimize legally reduce their taxes, and doing what the government wants done. So all of that stuff. And I think you eat a pizza one slice at a time. So you got to get into the community, you got to get to learn, you got to build your foundation. And then, what does it say? When the student's ready, the teacher will appear. So hopefully some of y'all are ready and you just met a teacher today for you. So Dave, thank you so much. I hope to get you back on again. And because I know you could go, but I just, I wanted to just do a good introduction of you to our practical wealth community. And guys, I want you to go out there. If you found somebody that needs to hear this, share this with them, because he dropped a lot of gems, thought process, information, just a way to think, to take a what I call a contrarian viewpoint and not just follow the status quo, because the status quo is broke, right? The 98% is running you off a cliff, right? So you need to get into the 1%. And that's good stuff. Dave, thank you. And y'all go out there and make it a profitable day.
Thank you, Curtis. Really appreciate it.